All right, let's dive right in. We're going to tackle one of the biggest challenges anyone in the markets faces. How do you cut through all that chaotic, confusing noise to find the actual, usable signal? We're about to go on a little journey, starting with a single price tick and zooming all the way out to a forecast for the entire economy. So, where do we start? Well, we start with a feeling I bet you know all too well. It really does all start right here. That absolutely gut-wrenching moment when a sudden, totally meaningless price spike, a whipsaw, kicks you out of what you knew was a good trade. It's that one frustrating experience that sends us searching for better tools, for a way to finally see the real trend through all the clutter. So, let's begin at the most fundamental level, right? A single price chart. How can we possibly tame all those little blips and jerks to get a clearer picture of what's really going on? This is our micro view. For years and years, traders have leaned on tools like moving averages. But, they all have the same basic problem. They're built using past data, and that means they always lag behind what's happening right now. You end up constantly reacting. The alternative we're looking at today is something different, a tool designed not just to smooth out the past, but to actually help predict the future. The Kalman filter. Okay, don't let the name freak you out. The concept is actually super intuitive. Seriously, just think about your car's GPS. Even if the satellite signal gets a little choppy, your GPS doesn't just show you where you were a second ago, does it? No way. It uses your speed and your direction to predict where you are right now and where you're headed next. The Kalman filter does that exact same thing, but for price. So the whole point is this. We want a nice, smooth line that filters out all that random noise, but, and this is the important part, we need it to stick to the real price action, like glue. We want to get rid of that lag that makes all the old indicators so slow on the uptake. And here you can see exactly what I'm talking about. On these charts, the price is the candlesticks, and those other lines are your classic moving averages. But look at that red line. That's the Kalman filter. See how it just hugs the price? Especially in those circled spots where things get crazy, it reacts faster and stays way closer. It's just a much cleaner signal. And the researchers, they didn't just build one version and call it a day. Nope. They built and back-tested 4 different models, and each one got a little more complex, a little more sophisticated, a little smarter. So you gotta ask, what was the result? The results were pretty incredible. The most advanced version, Model 4, pulled in nearly $40,000 in net profit. And get this, that's from trading just a single S&P 500 futures contract over 1 year. That's a real, tangible result that shows you the power of finding a cleaner signal. Okay, so we've seen how one specialized tool can filter the noise on a single chart. Pretty cool. But what happens when we zoom out? Let's go to the next level and check out the bigger toolkit that modern traders are using to really understand what makes the market tick. Think of it like this. The Kalman filter is like a surgeon's scalpel, incredibly precise, but for one very specific job. The market, though, it's this big, complex engine. And to really get what's going on under the hood, you need a full mechanics toolkit. And that's exactly where a suite of modern indicators, like the ones from LuxAlgo, come into play. For instance, take a tool like Volume Surprise. It doesn't just show you how much is being traded. It tells you if that amount of volume is weird compared to what you'd normally expect. See, a big price move on totally normal volume, that could just be a liquidity poke trying to fake you out. But a big move with a huge volume surprise, now that is your signal that real money and real belief are driving the bus. Or what about the arbitrage detector? This thing gives you a view that used to be only for the big institutions. It watches the price of the same asset across different exchanges all in real time. Normally, those prices should be identical, but when they start to split apart, that's a massive red flag that something's wrong deep inside the system, a signal of a liquidity crunch or shockwave moving through the market's plumbing. And that really is the key here. These new tools, they're not just about drawing prettier lines on a chart. Like LuxAlgo says, it's about finally being able to see the internal plumbing of the market, all the hidden flows and pressures that are actually pushing the price around. All right, it's time for our final jump. We're zooming out to the highest level possible. We're going from analyzing a single chart and the market's plumbing to trying to forecast the health of the entire U.S. economy. To do that, we're going to look at a tool that economists and policymakers all over the world use. It's called the Conference Board's Leading Economic Index, or LEI for short. Its whole purpose is to be a kind of economic weather forecast, giving us an early warning about major turning points, like recessions. Now, the real power of the LEI is that it's not just one magic number. It's a mix, a carefully chosen blend of 10 different real-world data points. We're talking everything from stock prices and new manufacturing orders to building permits and even unemployment claims. It gives you this really complete, holistic view of the economy's momentum. So how do we actually read this forecast? Well, the Conference Board has a specific way they do it, a framework to officially signal a recession based on what the LEI is doing. They call it the 3Ds rule. And these 3Ds are actually pretty simple to get. First is duration. How many months has the index been falling? Second is depth. Just how bad is the drop? And third is diffusion. How many of those 10 components are weak? When you check all three of those boxes, that's when the recession alarm bells start to ring. And hey, this isn't just theory. If you look at the most recent data, the LEI has fallen for 5 straight months. Now, that doesn't quite trigger the full 3Ds rule just yet for an official recession signal, but it definitely points to what the Conference Board is calling continued softness in the economy. So, we've gone from a single price tick to the market's engine all the way out to the entire economy. Let's take a second and connect all these dots and see why this journey from noise to forecast is so important. This really has been our journey, right? We started at that super tiny micro level, using a Kalman filter to smooth out the noise for just one thing. Then we zoomed out to the market level, using a whole toolkit to see the hidden plumbing. And finally, we pulled all the way back to the macro view, using the LEI to get a forecast for the entire system. At every single step, the tools got more complex and the view got wider. But it doesn't matter if you're a day trader, a long-term investor, or just a curious person trying to make sense of the world, all of these tools are really just different ways of trying to answer the same single fundamental question. And that question is this: as our tools and our technology get smarter and more powerful, are we actually getting better at predicting the future? Or are we just building things that finally, for the first time, let us see the present with perfect clarity? It's something to think about.